All right, thanks, Darrell, for the introduction as per usual. And let's do a quick sound check here. Make sure you guys can hear me okay. And you should be able to see a screen that just says small account secrets for exponential growth and reliable income. Perfect. Okay. So just out of curiosity, I did a webinar last week, and I just want to see like how many people on here saw that one, or is this the first time you've seen this presentation? And just to kind of see if there's a combination. Saw it, yes, yes, yep, seen it, first time, saw it. Okay, so kind of a couple. So what I'm gonna do is, if you saw the last one, I'm gonna condense that a little bit. We'll spend a little bit more time on Q&A, but I also want to make sure I just kind of cover everything for people that have been here on the first time. So this will be a faster one, and then we'll kind of get to some of the key concepts and Q&A and stuff like that too. All right, so let's just kind of dive into this. And so the idea with this, first of all, welcome. But the idea with this is just really identifying this quandary of, if you're trading, you've got this dream that, if you're trading, there's a lot of kind of dreams and hopes and ambition tied into your trading account, which can result in a struggle. And obviously that struggle is just kind of tied to the idea that you're not getting the results that you want. And so I just like to ask a question here, is just that, is that who here has been struggling? You pick whatever time frame you want, if it's over this last 6 months or just this year or however long, but who has been struggling just growing their trading account, or has had trouble just making trading work consistently? And that's just really what the question here is. And although this is focused on small accounts, with a specific guidance towards people with small accounts, because the hopes and dreams of people with small accounts are going to be different than the hopes and dreams of people with larger accounts. The idea is to kind of show you a few concepts here tonight to kind of get you over that hump. And then also, for those of you that want to do a deeper dive, kind of let you know what's coming up with that. All right, because this is a very real problem, and it's one of those things that, as a trader, you're not going to have anyone else to talk to. A lot of times, your spouse isn't going to understand. Your friends don't even know you trade. I've been through all this, so it's like, look, here's the things that I think will work, and so let's just kind of dive into this. And yeah, so let's just we'll kind of go here. Great, we got all this. So I mean, it took me, it's right about 8 years to where I got what I would just call consistent. And my first big trade was, I was in college and I met this girl, and she had $20,000 in financial aid money, and somehow I convinced her to let me trade it. And I put it into a stock called iOmega. And at the time, I was going to the Investors Business Daily conferences. And so, I spent 4 hours one weekend looking through the relative strength section, and I found all the 99 stocks and rating of 99. And iOmega at the time was like at $6, and it got up to $35. I put her whole freaking account in there. I had a stop loss at 18 3/4, and it came down and stopped me out, and went up over the next 6 months to $300. Now, there's a lot of good things that happened here. First of all, her $20,000 turned into $60,000. All right, so I did the right thing, and I gave her a $50 fee. No, just kidding. So what I did is I gave her, I think I ended up keeping 10 grand. Or I think I kept $20,000, and then she got $40,000 back. And by the way, we're married today, and we have 3 kids. I don't know what would have happened if I would have blown that money, but that was, that obviously worked out well. Now, yeah, I know this is live, Frank, but from there, I also had ups and downs where I would make, 3 times I took a $10,000 account and took it to about $120,000. And then at this point in time, I would do one very smart thing and one stupid thing. And the smart thing is I would take out $20,000 and I put it into rental real estate, duplexes, stuff like fourplexes and stuff like that. And then I had that 10K, and I was able to turn it into 100K trading options. And so now I'm thinking, like, I got this 100K. So now what I'm going to do? I want to turn this into $1 million, right? 10X, 10X. And this happened to me 3 times, where I'd go from $10,000 to about 120. I would take money out, buy real estate, and then with the additional 100, I'd try to turn that into $1 million, and I would just explode that account. Okay, that happened once, that happened twice, and that happened 3 freaking times. And what I learned through all that, and of course, I spent some time with like Mark Douglas, if you guys are familiar with him, and I just learned the whole idea of the importance of focusing on the process, the importance of focusing on the setup. okay, and not focusing on making money, which I know sounds ridiculous because we're all going into this because we want to make money. But if your goal is to make money, and if making money is at the top of your mind, it ain't gonna work. It's a lot of psychology based in that, but it's also, it interferes with the way that you observe the markets, okay? You're gonna observe the markets from a faulty point of view. If you've got that mindset, it does not work. So today the markets are harder than I started in one way, as there are so many computers and algos involved. But on the other hand, if you actually understand what's driving the computers and the algos, it's actually a lot easier. So what I'm going to talk about tonight isn't theoretical. It's what I've really been doing. Okay, I'm not talking about what worked last year. I'm talking about what's working now and the stuff that'll continue to work since this market is dominated by computers. All right. So what's interesting about this is that I've been trading long enough that sometimes I forget what it was like in the beginning. And it's what's great about the trading room we have now is that there's a group of us where, I've been trading for over 30 years, and then we've got some people that have been trading, for less, and then others that have been trading for like less than 10, or less than 5. And what's great about that is that, I will sometimes talk about stuff that I just kind of take for granted and say, well, look, this is kind of how I view it. But I forget that that may not make sense to someone who's only been trading for 3 months, okay? So, and it made me realize that the hopes and dreams of someone with a small account and not a lot of experience are completely different than someone with the hopes and dreams. I still have hopes and dreams around my trading, but it's different, right? It's not like, oh my God, let me 10x my account. It's let's create some consistent income out of this. And so that's just kind of a different thing. All right. So what happened and what really kicked this off is that I got an email, and this is just an example of one email of many, but it's just basically, from people that I always like to read the emails and stuff from our clients and from people that have been with us for a while. And this really hit home. It's like, John, you know what? During the years I've been a gold subscriber, I've never been able to show a profit on my account. And the problem is that your trades, I can't take them. In my small $10,000 account, I can't buy deep in the money calls on Amazon. I can't buy these deep money in the calls or puts on Google. And these are the ones that make you so much money. Okay. And I've been in touch with a number of small account members, and they're having the same problem. So my request is on behalf of all the small account traders, can you set up a small account and trade it and show us how you would trade that? All right. We see how you trade a large account. I want to know how you trade a small account. And I read this stuff and I'm kind of like, well, I'm kind of doing my thing, and hopefully that helps people. But it really hit me that if we're doing this as a service to help people, get their arms wrapped around this, then that would be a way to do it. And so over the holiday break in December, I said, all right, I'm going to set up a small account. I'm just going to trade it specifically as a small account using the strategies that I've learned over doing this for a long time, and show people just what's possible, okay, no matter what kind of environment that they're in. So just to show you a quick snapshot of how it's going so far. So I started this is the January statement for TOS, and that's our office address there. So I started at $5,937, and I ended at $11,935. That's 101% return, okay? And then from there, this is a snapshot of my account as of February 18th. In this case, it was at $16,800, so that was up 41% at that point. This is on the last day of the month of February. It was at $19,860. That's about, I think, roughly 60% for the month of February, but then it was up, a triple since I started, just in 2 months. All right. And so where are we now? And then it's like, okay, here we are on March 5th at $20,615. Now, one of the questions people ask is like, oh, okay, the market's going down now, so how are you doing? Well, here's a screenshot from today, okay? And today it was another $692.50. And it's because I'm specifically, again, small account is I lost money in Chipotle's today, all right? But you'll notice here, I made a lot of money on my spider puts, okay? Why did I have spider puts now, right? Got a new trade here in STNE, which is an IPO. I'm losing money in Target. Made some money on my VIX hedge, lost some money on my long in Yandex, but still up $692.50 today when the stock market is going straight down, All right. And that was very methodical and very specific. There are certain things that I look for where, based on my portfolio, I have got to have exposure to the short side if my main goal is to grow my account. All right. So this is what I mean by that. So if you get into the right frame of mind for this, the only thing that matters, okay, the idea that you're going to sit there and look at a stock, right? Let's just pick a stock, Costco. And the idea that your world is suddenly Costco and that it's all based on hitting a target or a stop, okay? You've got to throw that mentality out the window, because what that does is it trains you that you have to, in order to do this correctly, that you have to be right on your choices. And that is the absolute most disastrous thing that you can do if you want to grow a small account quickly. Your only goal is to grow an equity curve that goes from the lower left of your screen to the upper right, and to minimize the drawdowns, okay? And it's like, okay, you're gonna go up here, and at some point you're gonna reach a point where you go flat in your account, because your account, when you get to a certain drawdown point, which is inevitable, it's gonna happen, you get out, just go flat, okay? That's your job in doing this, right? Oh, I'm getting out flat. I'm gonna recalibrate, boom, next equity high. Because if you don't take that attitude, this is not going to work for you, okay? All the stuff that you learn about, oh my God, I got my target and I got my stop, that is, it is not a productive way to do this, because it gets you in the wrong mindset and get you focused on that, okay? So anyway, so I got this why listen to me. I got like 6 bio slides that I'm gonna go through in 28 seconds here, okay? In case you don't know anything about me, I've been doing this for a while. So my family background is all military. This is my dad. He was in Vietnam. Father, grandfather, World War II. Great-grandfather, World War I. That's me in all of those. So grew up in a disciplined kind of military family. Wrote my first book on trading in 2005. For a while, I did the speaker and TV circuit, and then that was fun. But then, and I did some weird things, like during 2008, I was actually pretty convinced the world was going to come to an end. I bought 25,000 ounces of silver and a bunch of gold. You know, it's 1,500 pounds. And then when I realized I had to sell it, it took me 3 days to box it up. And I think Henry went with me. We had guns to make sure nobody stole it. And there's my, $324,000, $325,000, and $300. Incidentally, the tolling company has now since been charged with some CFTC fraud because they were trading their customer funds, but I guess they did that after I got that. Through my trading, I've been able to do some hedging work with Richard Branson, which has been pretty awesome. Just visiting him on Necker Island, doing some charity work with him. So anyway, just cool stuff. But I got kids now. That's what I want to do. I want to spend time with my family, with travel, and I want to create a lifestyle around trading that does that. And part of that is doing my own trades, and then just I enjoy helping other people learn that. Okay, and yada yada yada. So these days I trade. One of the things that I'm known for is I did do a live trade where I made $1 million in one day. That was pretty awesome, obviously. And I just took that out of my account and bought a ranch. So I think it's really, really important to turn trading profits into tangible assets. Now, when you have a small account, that's not the first and foremost thing. If you're trading like a 10K account or smaller, your goal is to get it to 100K, okay? And then at 100K, your goal is to create steady income. And then you can use that steady income to do things like buy tangible assets like land or gold or experiences. But anyway, there's a whole process to that. So anyway, so this is the kind of stuff that's about that too. So what about taxes? So some of the stuff, it's a good question. So some of the stuff for taxes, I am actually fine doing this. Some of it I do it like in a Roth IRA. So obviously, on stuff like that, you don't really have to pay taxes on it. And then in other situations, what I try to do is pay the taxes if I can from other sources of income. But if not, that's okay. I mean, taxes are part of it. I do have friends that set up accounts like in Panama. I do have friends that set up LLCs so they can deduct expenses against it. There are a lot of things that you can do to minimize taxes, okay? So this is the kind of stuff that I used to do more one-on-one mentorships, and people would pay $10,000 to be with me for 3 days to learn a lot of this stuff. And what I wanted to do is just kind of the idea is like, look, if you can figure out how to grow a small account, it can bring you freedom and confidence faster than anything else. On the other hand, if you can't figure out how to grow a small account, well, there are not many ways out there to lose money faster, okay? When people tell me, they're like, oh yeah, I just opened up an account, I'm gonna kill this. And I go back and forth. Sometimes I just wish them the best, and other times I'm like, look, put your money back in the bank, start off with $5,000, because if you can't learn how to trade $5,000, you ain't going to learn, you're not going to know how to trade 200,000 either. It's a skill. Okay. Trading's a skill. So what we want to do is we want to figure out ways to discover how to grow a small account quickly. And then, but more importantly, in order to do that, you've got to understand what drives market movements. Because if you don't understand that, it is not buying and selling. It is not fundamentals or any of that stuff that you hear all the time. Again, if you don't understand that, this is just a very hard game. Okay. So here's an example of what I'm talking about. This was, I think, 2 weeks ago. So Zion Williamson, he plays for Duke. I think he's like the best basketball player in college right now. And he was wearing Nike shoes and he was injured, and millions of people watched his shoe fall apart and he tore his knee up. And the headline the next morning was Nike's stock market value plunges by 1.1 billion after basketball star Zion Williamson's shoe breaks. Now, if you go to Twitter, all you saw, and again, I'm not picking on anybody, I just picked random tweets, short Nike tomorrow, okay? That's the mentality of most traders that they learn. Oh my God, bad news, got a short Nike tomorrow, okay? And then again, random stuff on Twitter. King of Trade said, Nike weak and heading lower, okay, right here. Okay, what really happened is that this point here was right here, and then after that, it rallied and went positive on the day. Okay, well, gosh, what was going on here? And then Walnut said, I still don't understand how Nike is at $84 after all this bad PR, okay? Because they all mistakenly have fallen into that false belief that news drives prices. And news has nothing to do with prices, okay? What's about is liquidity. And I'll talk about this more in a second. But what happened in Nike is that it came down, okay? Notice where it's spending a lot of its time here. This is the monthly point of control. That's where the liquidity is. That's where the computers and the algos drive the stock. So we gap down on bad news. Well, guess what? Here's where monthly POC is, okay? That's what moves markets. And if you don't understand that, it's just not going to work for you, okay? So this is a great talk. If you guys are familiar, Druckenmiller, he owns, huge hedge fund. And one of the comments he gave here is that earnings don't move the overall market, it's the Fed. Okay, but there's one more thing here, okay? Yes, so earnings don't move the overall market, it's the Federal Reserve, and that's why a lot of, all the selling we saw in November and December has been reversed, because Powell learned how to speak into a microphone to reporters. Okay, so understand that that is a huge part of this. But the second part of this is that whatever I do, focus on the central banks, and more, and this is, I think, actually just as important, focus on the movement of liquidity, okay? Most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets, okay? That's it. So you've got to be able to focus on key variables, okay? You got to understand what the central banks are doing, and then there you got to understand the movement of liquidity, or this just isn't going to work for you. So the best traders are incredibly versatile. They can be short biased, but still capable of going long without hesitation. All right, hesitation will rob you. If you focus on key setups based on liquidity that fit your personality and you master them, then and only then can you be profitable in any market condition. Okay, so what are some examples of this? So you may have heard of something called VWAP, volume weighted, it's the volume weighted price average, yada, yada, yada. So a lot of people mistakenly, if they do even know that this exists, is they look at the daily level, okay? And that's okay for day trading, but it's actually pretty worthless. You've got to look at the weekly level and the monthly level, all right? The only longs that I'm going to take are when price is above monthly VWAP, okay, and then consolidating around weekly VWAP. Great, okay, or if it comes down to monthly VWAP. Otherwise, you're not playing the liquidity game, okay? And if you're not playing the liquidity game, you're not playing the right sport. So now in a small account, you might think, here's the first thing in a small account, you might sit there and go, gosh, John, this is a $600 stock. How can you play this in a small account? Well, first of all, I'm not buying the stock, all right? And then secondly, I'm doing options. Well, normally in a large account, if I see something like this, the trade I'm going to do is I'm going to buy some in the money options. So I might buy the 585 calls, and you can see here that let's just go with the ask price. But if one call option is trading at $25.40, well, that represents 100 shares of stock. So you got to do 2540 times 100. And so that's going to cost you $2,540, all right? Well, if you're trading a $5,000 account, it is completely and utterly irresponsible to buy that option. You cannot put 50% of your account into one trade. That's asinine, okay? That's asking for trouble. So what do you do? Well, in this case, what I did is I sold puts, okay? So guess what? If the stock's going to go higher, then the put options are going to lose value, right? So don't do it naked. That's scary. By the way, if you've never heard of this concept, it's super easy, but so don't be intimidated by it. But the main point here is that my maximum risk on this trade was fairly reasonable, as well as my maximum profit. Okay, so right now in this screenshot, it's up $550. I think right now the trade's up like $900 or something like that. So that's what I'm talking about here. So the next concept here is that you structure your trade so that if you're wrong, it's not a big deal. Okay, you cannot wake up, be dependent on the market. If the S&Ps are down 30 points, that should not be a bad day for you. Okay, so there's two ways to do that. One, you've got to know when and how to set up hedges, and it's really not a big deal. But there's a 5-step thing that you look at, and if you ignore that, you're doing that to your own. You're screwing yourself. Okay, you're doing that to your own detriment. But the next thing there is that in this day, so Amazon, okay, I am long Amazon here. All right, it's down $64, yet I'm only down $57.50 on the day. So the next piece of that is you structure your trade so that if you're wrong, it's not a big deal, but if you're right, you make some decent cash, okay? And that's a really important part of that. Another little more advanced technique, it's actually not as critical. I don't use it as much, but it's actually a nice kind of a bonus. But it's another example what you can do with options is that if I'm wrong, okay, so on this trade right here, if this works out, great, I could make $600. And if it doesn't work, I'm going to lose $375. Okay, that's reasonable risk to reward. But on the offhand chance that this thing implodes and drops drops, I could actually make money on that too. So you can structure trades in a way that if there's a disaster against you, quote unquote, you can actually make some money out of that too. So that's kind of nice. The other part of this too, and this is again another critical piece that you completely can ignore if you're just focused on this is my position and this is my stop and this is my target, is there are certain times of the month where it pays statistically to be fully invested, which to me is 90%, half invested, or only a quarter invested, and sometimes flat. So you'll notice here on February 1st, first day of February, I'm only 47% invested, and I'm 53% sitting in cash. That's by design, okay? The only times I want to be like 90 to 100% invested are about 1 week a month. And that's typically the first week or so of every month after the first day. After that, you steadily reduce your exposure, all right? That's by design. It's because of the way that the markets move. Also, as you get into monthly expiration, the markets get kind of goofy, all right? So we want to kind of avoid some of those shenanigans. The other part of this is scaling in, okay? This is not a one and done, oh, here's my position, here's my stop, here's my target, okay? That's a way of thinking that will not work here. You scale in. The first time I bought an option here, I paid $3.74. The next time I paid $2, all right? So my average price was pretty solid. And then I threw in a spread for 96 cents. You've got to scale in because you're never going to have the perfect entry, and you've got to throw out the idea that that's possible. So you scale in. That doesn't mean you martingale in. That doesn't mean you just keep buying until it works. You've got a limited amount of trades that you're going to do. It's a small account. You can't do very much, right? So yeah, doing it accordingly. So why options? If you've never traded options before, I personally find that options are the best way to grow a small account quickly and methodically. Better than stocks, obviously, for the leverage involved. Better than futures because you can fix your risk. Now with futures, you can use a stop, and I have nothing against futures. I trade futures. I'm just saying, if you've got a $5,000 account and your goal is to turn it into $25,000 and you're a new trader, options are way, way, way more forgiving and easy than futures, okay? In crypto, I like trading crypto, but it's a little bit more of a crapshoot at this point for crypto, okay? I'm just talking about if you want a methodical way to do this, like a blueprint, it's in options. So why options? Fixed risk. And a main important part of this is that it's asset class variability. Okay, at some point the stock market's going to go quiet, but then we can do options on ETFs representing currencies, or we can do options on ETFs representing gold. Okay, at some point we're going to have more options on crypto as well, and then strategy variation. Okay, whether it's buying calls or selling spreads. So that's why, I mean, again, options to me are really the only way that you could do this consistently, the only way you could do this methodically, like with a business plan, okay? And I think options are easy to understand as long as you don't go and read some 500-page book on options trading. There's a lot of good books out there on options trading, but they're way, way, way too complicated. You're going to get lost in the vegas and the deltas, and if you already know all that, that's fine. But if you don't get intimidated. All you need to know is calls and puts, all right, and that's it. And that's it. So you don't have to do this in a way that's complicated. And you can do this in a way that eliminates negative surprises, which is great. The other thing is that price targets in this case are really immaterial. So a lot of times what happens is, especially if you've read a book on trading, the idea here is like, okay, you know, I'm getting into this trade and I'm risking 1 to make 3. And then all of a sudden, the trader's whole world is this, okay? And what the only thing that matters is, if we dial it back to the beginning, is that you're managing your net liquidating value in a way where you're going from the lower left of your screen to the upper right. That's all that matters. So that throws price targets out the window, but you still focus on risk control, okay? What I mean by this is that if you get to the point where your position represents a certain percentage of your net liquidating value, regardless of the quote unquote target, you've got to reduce it, okay? Today, my spider puts doubled. They went from representing 10% of my account to 20% of my account. That's unacceptable. I had to sell it back down to 10% to reduce my risk, regardless of the target, all right? It's a different way to look at the markets. It's a way to look at the markets in a way to grow your account in a specific, methodical way. The other thing, okay, here's another key here, is that here's a, you know, data is a good example where I had enough funds, you know, I think at this point my account was at $15,000, I'm trying to remember, but I was okay buying one option at $12, okay? But even though I was going to hold it for a week, I went out 73 days. Well, why in the world would I do that? Because I want to minimize premium decay. All right. I'm a big fan of minimizing premium decay. For those of you that don't know, options are a depreciating asset. They start losing value the moment you buy them if the stock's trading sideways. But if you go out 73 days or, you know, even 30 days, that premium decay is so minuscule, it actually does not impact your trade. Where people make mistakes is they buy those cheaper weekly options and they're screwed. Okay. So again, you just got to know how to work these things. So the whole secret to kind of trading a small account and growing a small account is to think of it as being a gardener, okay? I have a garden. I'm not sure if I would consider myself a gardener, but I do a few things where I prune bushes and things like that too. But if you think of a rose bush, okay, the whole idea, if you're a master rose grower, the only way that a rose, the best, you know, roses are going to grow is if you actually cut, trim back, thin out in order to allow for growth, okay? Reduce the extent of something by removing superfluous, that's a big word, or unwanted parts. Target removal of diseased, damaged, dead, non-productive, structurally unsound, or otherwise unwanted tissue from crop, okay? All this means is, from trader speak, is throw the word hope out the window. Oh my God, my position's falling. I hope it's gonna come back. No, 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 okay? You're going to reduce that from your portfolio. You're going to remove the diseased, damaged, dead, or non-productive positions from your portfolio ruthlessly, and you're going to be doing this every day. Reasons to prune are for improving or sustaining health. So a big part of this is restructuring how you look at this. A lot of times we get into a trade and all our hopes and dreams are pinned on that one trade. Oh my God, if this thing makes its target, I'm going to be a winner. And if I get stopped out, then all of a sudden my parents are going to be proved right that I'm nothing but an idiot and I can't do this and I can't do anything. All those psychological triggers come up when this happens, okay, when you focus on the wrong thing. But if you focus on it this way, you kind of automatically shove that aside so you can actually do this, okay? Because all we care about is the results. So not surprisingly, when I'm doing this, a lot of times people ask, well, what's your win ratio? My win ratio is not great, okay? I have tons of losses because I actively get rid of anything that's not working. This is not about a 98% win ratio. I can give you a strategy right now that has a 98% win ratio. All right, so if you're trading S&P futures, have a 1-tick target and have a 99-tick stop. Okay, guess what? You're going to win 98% of the time, but then that one time you get stopped out, you're going to lose all your profits. All right, so this is not about a high win ratio. This is about, I always like to look at it as about a 75% win ratio, where your winners are about 3x of your losers. All right, that is a sustainable path of growth. Bum, bum, bum. So from here, the other thing you want to structure, I always say structure 15% of your trades as low risk lottos. Okay. So what do I mean by that? So this is actually very interesting, is that in this particular trade, I paid 28 cents for it. Okay. So my max risk, if this goes to zero, is $280. My max potential profit is $4,720. All right. My actual profit was 300. What does that mean? That means I bought it at 28 cents and I sold it at like 62 cents, which is the most common outcome for that trade. But what's nice about this, and by the way, I haven't even hit one of these yet this year. These trades that I've done typically are doubles or triples. I haven't even had one that's been a lotto. Okay. So you don't plan on these. It's just when they happen, it's nice because you get a nice spike in your equity curve. So it's kind of fun that way. So let's look at some more examples here. Another thing here, and again, I see a couple questions or MCP is like, well, gosh, that seems kind of complicated. So let me show you some easy things here. So there's one strategy here I do on ETFs and the spiders that's very, very simple. And I just look at a daily chart, all right? And we did this even the other day. You just look at a daily chart with Bollinger Bands. And in this case, we got down to that lower Bollinger Band. So we buy some out of the money calls. We're hitting there at 272. Buy some out of the money calls, 3 days out at 34 cents, and you're looking for a bounce to the midline. Great. That's typically almost a triple. In this case, it was 150% gain after 3 days. I'll do this one all day long. Okay. Very simple process where if your only goal is to steadily grow your account, is to steadily grow your equity curve, then guess what? You're looking for these base hits. Knock it out, knock it out, knock it out. You're not worried about home runs. You want high probability base hits. The other thing with this is you do not want to be greedy. Okay. If you guys remember Roku is trading at like $70 right now. If for some reason I still had calls on this, I would be up a lot more money. However, anytime that there's a move, let's say it's from point A to point B, okay, there's a sweet spot that's about right here. That's all I want. I don't want to catch 80% of the move. I don't want to catch 50% of the move. I want to catch about 25% of the high probability move, right? So when I bought these options at 4, when they got close to 8, it was time to get out, okay? Get your 100% return, make like a tree, and the joke is leave or, make like a tree and get out. Don't be greedy. It's okay if it keeps going. Your goal is to grow your equity curve. Your goal, nobody's handing out Oscars for that, you were the last one out of the trade. You've got to imprint that on your mind. So I'm a big fan of a concept called average true range. Okay, so what's average true range? It's a mathematical calculation. This is on any platform, and it measures where a stock has been trading on average over the last 14 days. Guess what? All the algos follow this. Okay, you want to know Where's the one ATR upside target and one is the one ATR downside target, okay? And you can see when it gets here, it pretty much, in this case, stopped for the next couple of days. Get out. That's all you want. Just get your average to range and get out, okay? We're not going for home runs here. Another thing I like here is weekly rolling pivots, something that people don't really know about, but guess what? All the algos use them. In this case, Roku is cruising. We get up to that weekly rolling pivot. Guess what? It's done because the algos at that point are all coming in. And from here, it actually pulled all the way back to 51 before it did its next, post earnings run. Take that easy money and leave. So there's a lot of free tools if you use Thinkorswim. None of this requires any special indicators or anything like that. One thing I've done here is I've taken all these free tools that are on there that I like and consolidate them onto one chart. So if you look up there and down here, I've got a checklist and to say, okay, is the ADX over 25? Yes. Is the ATR, is it over, 1% of the stock? Yes. Is the beta over, 1.5? Yes. Where is the Bollinger % B? So I go through all these checklists and then I can just see at a glance, oh, it meets all this stuff. Great. I want to get that stock. Once in a while, we'll get a really nice one. I mean, this is one on Tilray, which the weed stocks to me are, they're kind of hit or miss, but this was one that went a little crazy. And yes, we bought it at $5 and we sold it at 27. So it was a 5-bagger. And again, this is when the account was pretty, I'm not risking a lot on this. It was a $532 max risk on this. And that'll happen once in a while. But I got to tell you, that's the only time I've had a 5-bagger this whole year. Most of the time it's, 50% gains here, 50% gains here on the options. The other thing to keep in mind is that you've got to have a mixed portfolio so you're not beholden to what the stock indexes are doing, okay? You generally should not have a day where you're making money on all your positions. That's actually a bad sign. So on a day like this, I try to keep my portfolio less than 30% correlated to the S&P 500. So in this case, data was up, Etsy wasn't doing much, Herbalife was up, InBev was down a little bit, Roku was up and ZS was down, okay? If all these were up, then all that tells me is like, man, I got lucky. If the S&P, if these are all bullish and the S&Ps were down today, I'd be screwed, all right? So you've got to have a non-correlated portfolio. The other thing is that if you got a big move in something, a big move is for selling, not high-fiving. On this particular day, ZS had a fantastic move, okay? Small account, like 3 contracts. It's up $1,275. Get out. This is not the time to high-five, and oh my God, this thing's going to keep on going. You get out, all right? Just hard and fast rules for this stuff. That's the key. Never want to have all your positions basically tied into the S&P futures. So at the end of the day, consistency is key. And in order to consistently make money, a trader has to learn how to create steady winners off of their trading account, okay? Avoid the sucker bets that most traders unknowingly take and then sadly lose money on, okay? Especially those news plays. Those are the worst. Know when to rotate out of your current bets and into new ones. Remember, you're growing roses here. Prune the diseased wood. And then manage your NLV, which is your net liquidating value. You're going to stop managing positions. You're going to manage your NLV, and that's the key. Most traders are tricked by the markets and financial press to get into trades that set them up to lose from the moment they enter a position, okay? That's not what I want you to be doing anymore. So if you've liked all this stuff, and again, hopefully this is kind of a helpful aha moment for you if you're trading small accounts, there are many simple ways to stack the odds in your favor, especially if you're trading a small account. By the way, if you're trading a small account, you've got so many advantages because you can do things that people with big accounts can't do. You can trade illiquid stocks, okay? There's a lot of money to be made in illiquid stocks, and it's not crowded, and the algos aren't trading them, okay? I'll be discussing all these principles that I reviewed tonight in excruciating detail, as well as 7 technical strategies I have narrowed down as my favorite small account setups, as well as the scans that I use to find them, okay? So for those of you that are interested, I am going to be doing a class this Saturday, and it is the basic class here. We've got all the strategies here that I'm going to be going out in detail. Also, for those of you that are newer to options, there will be a bonus of an Options 101 course. This will get you up to speed on options so you aren't lost, okay? It's a recording, you'll get it, go through it, so you can look at it and say, oh, okay, now I understand options, so this is not going to be a foreign concept. And then I'm also going to do a quick start bonus tomorrow, which will also be recorded, which is basically, if you're kind of newer to simpler or newer to my philosophy of the markets, it's walking you through soup to nuts. Like, look, based on 30 years of doing this is how the markets move. Okay, and this is just a general backdrop, how the markets flow and all that kind of stuff too. And then on Saturday, March 9th, okay, starting at 12 noon Central, CST, we are going to start the strategy class. Now, if you can't be there live, that's fine. You can get we'll be recording it. Okay, we have a kind of an early bird discount prior to the class starting at $4.97. After it goes into our store, the price jumps up. So even if you can't be there live, you can get this and at least get the recording. And then if you type in simplertrading.com/SAS, that'll take you to this page and you can do that. Now, what I recommend for a lot of people is, if you do the pro, is that you get all that stuff I just talked about, plus 3 bonus days of live trading. Now, in the live trading, there's a couple of reasons to do this. One, 19 out of the last 20 live trading classes I've done, we've made enough money trading 1 lots in the class to pay for the class itself. So talk about an immediate return on investment. That doesn't mean it's absolutely guaranteed that's going to happen, but it's happened 19 out of the last 20 times. In something like this, I am totally zoned in and focused on this, and it's just an interesting phenomenon when we're all kind of so, we're all locked into this idea. The performance on the live trading classes generally exceeds, the rest of the trading for the rest of the year. So I love doing these things. The other thing is that if you're doing this, if you're learning to play golf, and let's say you've never played golf before and you got to play with your boss on Monday, and you spend the weekend and you read the 3 best books on golf, and now you go in there and you know everything there is to know about golf. What's going to happen the first time you get up to that tee and you take a swing? Well, you're going to have no practical experience, okay? And it's just not going to work. You've also got to spend that time in golf working on the technical rehearsal. Okay, you got the mental rehearsal by reading, but you got to have the technical rehearsal where you're sitting there swinging the club, and you've got a pro, someone who has done this before, that can look at you and say, you know what, you need to lighten your grip up. You need to rotate your hips back a little bit more. You need to raise your back elbow. And it's the same thing in trading. This will be an opportunity where you're going to look at my screen live. You're going to see me entering orders live, but I'm also going to be answering questions like, well, gosh, John, I know you talked about this on Saturday, but when push comes to shove, how do I know that this is going to hold? How do I know that this is the right trade to do? And, we talk all through that. And then the elite version is just like, if you like the 3 days of live trading, and by the way, this will be on the Wednesday, Thursday, and Friday following the class. We're going to do 2 additional days, which we've never done before, because what I've found is that on something like this, we're going to initiate all these trades on Wednesday, Thursday, and Friday, and then 2 weeks later, on the 27th and 28th, we're going to do 2 more days to follow up on these trades and initiate some new trades. All right, so that's what we got going on. I'm pretty excited. For those of you that are looking at this, for the Elite and the Pro, for the first 250 people that sign up for the Elite and the Pro, we're going to have a bonus day on follow-up day on April 4th, where you can kind of do, all these fun questions and stuff like that too. Okay. Hidden indicator cost. Nope, there's no indicators. So all the indicators I'm using are free and available, like on Thinkorswim. I'm going to give you copies of all the workspaces I've created. I mean, I've created all these utility labels to kind of create a workspace. I'm going to give you a copy of all the volume profiles that I like to use, all the VWAPs that I like to use. And they're all on there. You don't have to buy any indicators, but I spent a long time creating these workspaces so that I can look at them at a glance and see all this, and I'm happy to give you guys copies of it. When are the first 3 days of live trading? So the Wednesday, let me look at my calendar here so I can get the right dates. Calendar. So it's next week, and that would be the 13th, 14th, and 15th. So this is going to be the 13th, 14th, and 15th. And then the whole idea, I mean, the only reason for me to do something like this is that, again, I see people doing classes out there for like $5,000, which I think is ridiculous to me. A $497 class is something where it's like, I think it's a pretty good value. And I think my main thing is that you need to be able to get an ROI on your investment. So, if you can't spend $500 with me and invest in this education and then use that to make multiples of that, many, many, many multiples over the rest of your life, there's no reason for me to do this. Okay. But that's it's the only way I'm motivated to do this. Otherwise, I would just be trading. Are there any of the 250 slots still available for the Elite and Pro class? I do know that that's about wrapped up. So we did on Thursday when we offered this, there were a lot of people that took advantage of this. So I would just say if that's something that you're interested in, I think what I'll do is, in case it's close, I can tell them tonight that if you're doing it tonight, we'll just get you in there. I mean, just to be fair, I don't want someone to, thinking they're going to get it and then they don't. But I just, that's something where I think the follow-up there will be important. Yeah, Rick James, absolutely. This is not a socialist regime. So, I mean, I think that, anybody that's looking for that is in the wrong spot for sure. Yeah, no, I think the pro one will be really good. Can this work if I'm in a newbie in TOS? Okay, so if you're a newbie in TOS, I would definitely do the Options 101 bonus. I don't know if newbie in TOS means you're new to options, but I definitely would do the Options 101 bonus and the quick start. And then we do have some tutorials on just how to use Thinkorswim, and then Thinkorswim has some great tutorials as well. I have some of your tools. Would it be more beneficial for me to use them in conjunction? Yeah, so Sebastian, so if you've got like 10x bars, I'm going to be using 10x bars. I'm a big fan, squeezes, stuff like that. So there are some tools that, we've utilized in the past that I'll certainly be showing you how I use that with this. I bought the basic class. Can I upgrade? Yeah, so Mark's probably the best way to upgrade. I'm thinking at this point is probably to call us, because I don't think we have actually any upgrade links right now. But I would say that, because what's going to happen is if like on Saturday you want to upgrade, you're not going to be able to be eligible for the bonus. So you can call us, email, and at least that way we'll kind of get you locked in there. Do you trade weeklies within the same week or normally 1 to 2 months out? So David, the answer is yes. So I'll do both. Yeah, so Renee, the whole idea with this is that, will you be able to follow along with the live trades in TradeStation? Yes, and I'll be using some TradeStation charts as well. I mean, Thinkorswim for options, really has kind of the better layouts, but you'll be able to do everything in TradeStation as well. What if you cannot make the Saturday class? So it will be recorded. And so what I recommend is that if you're looking at this and saying, you know what, this looks great, I want to participate, I would recommend that you get in and watch the recording, because when it goes into our store, the price gets jacked way up. It's just, the idea is like, our idea of an early bird discount is like, hey, if you're going to, participate in the class or, purchase it before the class and get the recording, great. You're going to get kind of an early bird pricing. After that, it goes into our store. People who find out later, it's a much higher price. I'm new. I just got the strategy class, may upgrade. Where do I get the options 101? Okay, so the Tashi, if you got the strategy class, I believe that the options 101 will either be emailed to you or you're going to get a login, and you'll log in and get that. That's how that works. I joined this webinar late. Will there be a link available? You mean like a replay? We will send out a replay later, yes. When do we get copies of your workspaces? So we'll do that on Saturday. Yeah, it'll just, because I'm going to show you how to use them and stuff like that too. I purchased Pro. Can I purchase the extra 2 days of Elite live trading days just prior to those trading days? Yeah, Xander, you can, you could look at that on Saturday or just prior. I mean, if you got the Pro, you've already got that, that extra bonus. So yeah, that's fine. Yeah, no, we try to make it pretty easy. So that's not, What time does the 3 days of live trading happen? So Jeff, we just do it during market hours. So I'm in Central Time, so it'll be about 8:30 to 3. We'll start a little early and then we'll stay a little late. But basically it's, and then we'll have, like an hour and a half lunch just so everybody can kind of, because, your heads can get kind of full. Sherry, Mandy, go ahead and slap me upside the head. Hey, I could use one of those. Will the class be taught in webinar mode or is it going to be a free-for-all? I think it's more of a free-for-all. We've kind of done both, Mohammed, but I like it when people can see each other's questions. But honestly, part of it is managing question flow. So as you guys know, it'd be easy to kind of get distracted and go off on some wild goose chases if I just focus on the questions. But I've done this enough where I kind of know which questions to answer and which questions to ignore. And I'll be frank with you on Saturday and say, look, if I'm ignoring you, just it's not, what you're asking is not the right question. Because and I don't mean to sound arrogant or anything. It's just I've done this enough where, and I've been in classes where I see that an instructor gets derailed and how annoying that is. So I will be on point and on message. And I'll answer questions if they're relevant. But then what I'll do is when the class is over, I'll stick around and answer questions. So I'm not going to stop, and spend 20 minutes on what exponential moving averages are, if someone has that question as an example. May I know if I should stay in the Tilray trade? Eric, I'm kind of done with the cannabis stocks at this point, so I would move on. Thank you. Looking forward to the class. Thanks, Mohammed. Yeah, I'm looking forward to teaching it. I think this is going to be a lot of fun. Would this class be worthwhile for a futures mini trader? Paul, gosh, that's a good question. I do trades in the spiders. Some of the setups I do apply to the S&P futures. And, frankly, some of them don't. But, I mean, there's going to be some stuff with the VWAP, volume profile that'll definitely apply to the S&Ps. So if you've never used VWAP or volume profile with the S&Ps, I think you'll be pleasantly surprised with that. How much money should we have to trade the live sessions? Well, you saw the account I started with was $5,900. So, you can do small accounts. It's because we're not going to do big positions or anything like that. We're not going to be buying $25 options. Eric, I just registered for the elite class. Awesome. That'll be great. Do you trade options on futures? So Ben, that's a good question. I do. And if I'm happy to do a couple, especially during the live trading, to do some options on futures as well. I like trading those. I try to, I know there maybe could be a little more complicated for folks, but by the way, trading options on futures is a way to get around the day trading rule. So there's definitely some benefits to that. You know what, Rick James? Look, I think this is probably the perfect class for you then, because it's like, I mean, I blew up the 3 accounts. I know all the psychology behind why that happens, and the goal of this class is to kind of get you over that hump and just kind of get you consistent and profitable. How long is the class on Saturday? It's scheduled for 4 hours. Is there a list available that shows options on futures and FX pairs? Well, so I trade options on futures on Tastyworks and Thinkorswim, and they don't have options on everything. So, but S&P options, crude oil options, and stuff like that. And it's a little, we can spend. It's worth looking at, because if you understand equity options, you'll understand futures options, and there's a lot of kind of cool things there with futures options as well. John, when will you have a next class like this? Well, so I only do classes once. This is a concept that I think will be important. This is going to be the only time I do it. So I would just recommend that if you like the idea, I mean, at least again, get it at this kind of discounted price like this, because the concepts are going to, live forever, so to speak. What time does the Saturday class start? Noon Central. And if we can't make it, can we watch it afterwards? Absolutely, yes. Yeah, we'll have those recordings up for you. John, thank you for focusing on small account holders. No, SP. I mean, look, I appreciate that. I mean, I think that's, at the end of the day, I realize that there's a lot of people out there with small accounts, and it's a disservice not to focus on that specifically. So I mean, I'm really taking this to heart. Brian from Indiana. John, my wife told me, don't be stupid, sign up for this class. Send me your address. I'll send her some flowers. I think that's a good idea. The option strategies you're going to teach, what are they? Okay, so they're not going to be super complicated. A lot of them, half the time, I'm just buying a call or buying a put. And then from there, we're going to do some light spreads, just some put credit spreads and call debit spreads. And that's about it. It's really not about complicated option strategies. It's just about, and a lot of times we do that like on Chipotle's. It's too expensive to buy a call, so what's a cheaper way to participate on it? How does this class differ from the one you taught a few years ago? Okay, so the one I taught a few years ago was, this is a squeeze, buy calls, and it was pretty rudimentary. I think it was effective. This takes into account the whole idea of just managing your net liquidating value and really taking advantage of things like VWAP, volume profile, none of which I covered in that class. Do you have special offerings for Tastyworks or other brokerages? I mean, not really. I do know that with TradeStation, they do have a rebate program. And there is a specific broker there you can contact, and if you like open up an account at TradeStation, they'll like rebate the cost of the class with commissions, which is great. Tastyworks, which I love, and I'm trying to find a way. I know Tom very well, love what they're doing, would love to work with them more, get our indicators on their platform and stuff like that. And then of course, you know, we've got a Thinkorswim. We're pretty tied in with all our tools and stuff there. Do you do naked puts? Not in small accounts, Butch. So in a big account, yes. In small accounts, no. The main thing with small accounts is you got to eliminate the risk of ruin. JC, need to keep hammering them for getting indicators here. Can you use this strategy without constant attention to the screen? Actually, yes. So the idea with this, and if you've got a small account, basically you can't day trade. There's that whole $25,000 rule. So none of the trades I do are day trades. And in fact, one of the positions that we got today, these are call options and STNE. I forgot I had the order placed. Like I placed the order 3 days ago and we got filled today, and I forgot about it. So you know, a lot of that stuff you don't really have to stare at the screens. You can use other platforms, but you have to trade at IB. So we do have a lot of people who actually might get a, you know, like they'll get a Thinkorswim account and then just trade on whatever platform they want. But you'll see, I mean, you might be able to create the same, you know, if you see what I have in TradeStation or Thinkorswim, you can probably recreate it in IB as well. Will you be using VWAP and volume profile on the daily charts? Yeah, so the way I use VWAP and volume profile is they're set. So whether it's a daily chart or a 30-minute chart, the levels are the same. Yeah, so these will be, there's no special indicators for this. Now, if you've got some of the indicators I've created, like 10x bars, I will show you how I use those with this. But the idea with this is that, you know, you're talking about, hey, you know, ATR, ADX, volume profile, you know, these are tools that are readily available out there. It's just understanding how to use these together for small accounts. Do you use good till cancel orders? Yes, absolutely. Never market orders. You know, almost always using either limit orders, good till cancel, you know, orders and things like that. I traded my IRA and I can't trade naked puts. Okay, so Butch, I don't do naked puts for small accounts. So it's either long calls, long puts, or spreads. You might check and see if you can do spreads. If you can't, it's not the end of the world. I would say 60% of my trades are long calls, long puts. And if I'm doing a put credit spread, you actually could still do a long call. They are selling the 10x bar. Oh, nice, Eric. We should check that out for sure. One fear for me is having to get out of a trade intraday, making it a day trade. Yeah, so I don't do that. Like I never get out of the trades intraday. Now I think you can do 3-day trades a week, but yeah, I never get out of a trade the same day. Now, I mean, and part of that is structuring the trade so that if it, you know, if the shit hits the fan, pardon my French, that it's not going to hurt you too bad. Yeah, Jojo. So the TTM weekly rolling pivots. Yeah, if you guys don't have that, I think I can. Yeah, we'll get that available during the Saturday class too. Jonathan, I see you're asking what if it's a necessity, and I don't. Maybe you're asking about the trade. I mean, you can do 3-day trades a week. So I mean, this year I actually haven't had to do it yet, but you can do 3-day trades a week. Do you ever try to adjust or defend trades? No. I mean, I prune them. If it's not working, I just get out. My wife likes orchids and her name is Shelly. Oh, that's awesome. All right, let's see what else we got here. Oh, thanks, Eric. Okay. Yeah, that's always too bad when that happens, but it's good to, you never even know if it's the right, you know, the right tool and all that fun stuff. Let's see, we've got that. On average, how much screen time does it normally take you to analyze, locate, and get into trades? Yeah, I would not even really a few hours, Andre. I mean, I'd probably spend about an hour a day. You know, I make like a checklist, I scan a few things, I look at the indexes, and then I just put together my plan. And that's it. And you know, I can watch the markets all day, but like today, I had a meeting downtown Austin at 9. I had another meeting downtown Austin at 11. Right, I could not be in front of the computers. The S&Ps were crashing, but you know I could check my portfolio once in a while, and it was totally fine. I had my hedges in place. I really had nothing to be concerned about, and so I structure my trades so that I don't have to be in front of the computer. You know, I mean, I got things like, you know, wife, kids, you know, lots of people asking questions. You know, I kind of have to be available too. So I try to structure it purposely so I don't have to stare at it. Does Henry's Options 101 cover credit and debit spreads? Yes, I believe so. If for some reason I'm wrong on that, we can cover that, but I believe it does. Is it possible to download a copy of this slide deck? I know you'll get a copy of this recording. I don't know if about the slide deck, but we could probably, but during the class, I'll give you guys a copy of all the slide decks and stuff like that too. Hi, John, you mentioned that you will continue to trade the small account for the rest of the year. Will we be able to follow each trade? Yeah, so Antonio's, I will post, here's the hardest thing is in the room. If I post something and say, this is for the small account, it confuses everybody. So, but I'll try to do my best and say, like this today, you guys, I was showing my small account, like, hey, this is the trades I'm in, this is what I'm doing. But you'll learn like, you know, position sizing and stuff like that too. On average, how many number of trades are you doing on a daily basis? Well, I would say it's more like a weekly basis. I would say 3 to 5 trades a week, maybe 5 to 6 trades a week, something like that. Yes, Jonathan. So in a large account, maybe I'll spend time defending a trade. In a small account, I prune it, get rid of it. No mercy. Terminator. When is the quick start class tomorrow? So tomorrow it is at 3:30. And I may be having a glass of Cabernet during that, so it'll probably be a fun class. How long do you generally keep a trade on? It seems like my average, I mean, it seems like a couple days to a couple of weeks is kind of the average. I know that's kind of a long range, but you know, it just kind of depends how, you know, how fast it works out or doesn't work out. Yeah, no, I mean, I love the Tom and Tony trades are great. It's just different. It's more, it's the goal of, yeah, let's create some income. You've got more accounts, you've got more positions. They're smaller size, so you know you're not going to get hurt. And yeah, it's just different. I love what they're doing. It's different kind of trading though for like a large account for income or you know different things like that. Jojo, that's awesome. Yeah, and if you guys obviously if you have any questions during the class, you know, just let me know. Darrell, that's awesome. Do you put a stop based on price action or P&L? So it's more based on P&L. So yeah, and Nelson will obviously be talking a lot about that. I generally, if a trade's not working out within the first 3 days, I just cut it loose. You know, again, prune. Yeah, so I'll show you all the tools, and again, a lot of the tools. I mean, I'm going to show you some of the premium tools I use. They're not critical to this. A lot of it, you know, again, ADX, ATR. I mean, we'll list it all out. Like I said, I've created workspaces in TOS where I've tweaked everything to how exactly I like it, but I'll show you all the settings and all that kind of stuff so you can try to recreate it on your own platform or, you know, all that kind of stuff too. If you will not day trade during the 3 days of live trading, how will we learn how and when to exit the trades? So Renee, so we're going to go Wednesday, Thursday, Friday, right? I'm going to set up some trades so that we get in on Wednesday and, you know, we'll probably get out on Thursday and Friday. So I will deliberately set up some stuff like that for sure. Will you go over what scans you use and how to set them up for finding on your own? Yes. Yeah. So I've got scans that I've written for Thinkorswim. I'll give you guys those. And we've got an internal scanner too. I'll show you what I do there. FinViz is also a good one. Who do you talk to for the TradeStation rebate? Mandy or anyone, do you have Kelly's email address? over at TradeStation. And I'm just going to, all right, let me make sure. How small account? Really, it's like, I mean, again, the account I started with was $5,900, $5,900, $1,000. I mean, as long as you can, yeah, I mean, it's going to be harder with $500, right, than 5,000, but it's still the same concept. Again, you got to remember, trading's a skill. Once you learn the skill and you can prove it, so think of it this way: if you learn the skill and you can show someone like 6 months of statements, like, hey, I had a $500 account, and every month I've grown it by 50%. How about you give me 20 grand? And we can split the profits, or something like that. But all you got to do, you got to just develop the skill first. I assume you will show what chart time frames that you use for VWAP analysis. Yes, absolutely. And are we gonna be on our own after the training? Well, so we're trying to actually figure that out. I mean, we do have a gold room where a bunch of us are in there trading. It's not necessarily specifically for small lot, but I'm in there showing my stuff too. So that's kind of a continuation. We've kind of played around with the idea. Do we do some kind of follow up where it's just small lot? So we could talk about that on Saturday. What is the quick start bonus? And so that's kind of like if you're newer to simpler trading, if you're newer to anything I've done, that's just kind of a quick start, get you up to speed on kind of, the whole idea of how the markets work and stuff like that too. And it'll be recorded. It'll be tomorrow at 3:30, but it'll be recorded. How long do you spend having to find trades? So Lorna, believe it or not very long. So the beauty of this trading is that a big part of what you're going to learn how to do is learn what not to do. So it just means there's a lot of trades you're never going to take. So it makes it a lot easier. So part of it is scans. So either there's two main things. One is scans. Okay, here's some setups that meet specific criteria. And then the second is a handful of what I just call name stocks and indexes. So the S&P 500, the Qs, and like Amazon. And you're just like, okay, you just set up alerts. When this happens on this stock, I want to do something. But you're only going to do something if these specific things happen. Otherwise, you don't want to, you don't want to mess with it. Can old members still learn stuff from the quick start class? Yeah, Xander, if you've been here a while, I mean, there's going to be some stuff on there that's like, okay, yeah, I've heard John talk about the squeeze. But every time I've done that one, I've had people that even have been here for 5 years are like, man, that was actually a great session. I really learned. Henry and I were talking about that today after the close. Like, even just talking to each other, you remember things that you forgot about 5 years ago. So Options 101 bonus is going to be a recording that'll be emailed to you, or you'll get a login. You can log into your class section and watch it. And then the quick date class start time, I guess I could just write these on here, right? This is going to be Friday at 3:30, and there'll be a recording, and then this is a video. John, will you show us how to scan? Is the scanner a TOS scanner? Yes. And if you don't have TOS, I'll show you some web-based stuff as well. Yep. Yeah, and Darrell's just saying that the Options 101 is ready immediately. Once you sign up, you get the email giving you access. That should be a rule for trading a big account as well. So, Jonathan, believe it or not, even though this is tailored to small accounts, if anyone trading a large account who's aggressive, it's the same principles apply. Absolutely. Joe, hey, John, this is what I'm looking for. Thank you. Awesome, Joe. No, I'm looking forward to having you there. Oh, sorry. Yeah, listen to Diana. I keep saying it starts at 3:30, but the quick start session is at 5. Yeah, so I just work here. They just when somebody tells me to show up at some point, I'll be there. So that's 5 o'clock. So thank you. That is 5 o'clock. So definitely we'll be having some wine during that time. Why is this webinar not available to access on cell phone? It is, Chandra. So you can use your iPhone or Android and view it on that. Absolutely. It will go much longer as I have a long list of questions. Well, hopefully by the time we get to the end of the class, I will have answered a lot of those questions, but I'll definitely stick around. Yep, you too. Awesome, Bryant. Good deal. All right, guys. Well, it is 8:12, and we'll just do one quick review. Okay, so date and time for the strategy class. So Saturday, and sorry, this is a big mess here. Well, here, let me just clear all this out real quick. So again, real quick, just type in simplertrading.com/SAS, and you'll just be able to, scroll down, and there's more information on the page. This is going to be on Saturday, March 9th at 12 noon Central Time. And then the quick start bonus will be Friday, that's tomorrow, from 5 to 7. It will be recorded if you cannot see it. This will be a video link that's sent to you. The pro includes 3 days of live trading, and this is going to take place on our already forgot. This will take place on the 13th, 14th, and 15th. 13th, 14th, and 15th. And then the 2 additional days, we're going to take a week off, and then we're going to do the 27th and 28th. And then remember, if you're one of the first 250 to get the pro or elite, okay, for the first 250, there'll be a follow-up day on April 4th. Again, the idea here is continual education to make sure that you've got this down, okay? I think this is going to be a great class. I'm looking forward to it. I'm looking forward to holding up and finishing. It's one of these things with those presentations where I've got all my notes, I've got some slides, and now obviously I'm getting time to where I got to hole up and make sure I've got everything explained in such a way that it's easy to understand, and that's kind of my favorite part. So I don't know. I don't think I'm gonna have to pull an all-nighter Friday night, but I'm sure I'll be having some large quantities of caffeine. Yep. Oh yeah. So if you've got let's see. You know what, Chandra? So that's a good question. That's above my pay grade. So Darrell, if someone doesn't have a login to the Simpler Trading app, can they watch a webinar like this, or do they have to have a login like for the class and stuff? I do know for the class you can. Yeah, so what Diana is just saying is use your email and password that you created and sign up for the class. How am I know if I'm the first 250? Okay, so for the first 250, I just was talking to everybody out there, like, because I think we're actually past the first 250 now, but I was just saying, like, look, if you guys sign up tonight, we'll just get you in there, because I don't want someone to be like number 251 and be cut off. I just think that's rude. There's that, it's just, so if you're in there tonight, before midnight, we'll make sure you're in there, so you don't have to worry about it. We do have a live event in Austin at the beginning of April. On Saturday, I will show you guys a link for that. If you guys are interested in doing that, it's always kind of fun. No, awesome, JJ. No, very good. I mean, again, this is the kind of stuff I wish this is the kind of stuff that I had access to when I started. It would have saved me a lot of frustrations and a lot of fights with my wife. But of course, those all build character. All right, guys. Well, thanks for joining us tonight. You guys have a fantastic evening. I am looking forward to working with everybody on Saturday, and I guess Friday night as well, in depth. And then let's just knock this out of the park. I think this is one of those things where, hey, you know what? It's time to end the frustration, learn how to be a gardener, and let's knock this out and look at some forward progression from here. And I'm looking forward to it. All right, you guys have a great night. For those of you that are in the room, I'll see you there tomorrow afternoon, and then otherwise see you Friday evening and Saturday for the class. You guys have a great night.